Woo! If you're a Tesla investor, get ready because one of the biggest catalysts in the short term for Tesla just happened. The Fed came out and they just reduced interest rates by 0.50%. 50 basis points. Man, this is gonna be an awesome start to this bull run. Now, I understand the stock price today, it went up, then it went down to the red, which was kind of, weird. It seemed like to be sell the news event, or yesterday if you guys are watching this the day after. But I do expect in a few days' time, when a lot of investors have slept on this, they're going to realize that, wait a minute, this is actually bullish. This is bullish for this is what Tesla needs. Elon Musk has been banging on the table that the interest rates were the reasons why the stock price went down, was the reasons why people didn't buy Teslas. They didn't buy Teslas, they didn't buy vehicles. I mean, it's just basic economics. And I went deep, I did a deep dive on why this one catalyst, which is the interest rate cuts, is the one that can take Tesla stock higher, maybe above 250, 260. You guys can check the video here, it's in depth. But I've said this before and I'll say it again. Tesla stock crashed the hardest when interest rates went up. Now, Tesla stock's gonna rally the hardest when interest rates start to go down. And the way how the Fed laid out when they were speaking yesterday or today, depending on when you guys are watching this, the roadmap is there. They are in the cutting phases, and it looks like it's gonna be gradual to the point that we're not going to have a recession, which is a good thing, which is a soft landing. Which again, if they could do a soft landing, bravo to the Fed, because man, soft landing has never really happened. And if it did, it's very rare, like 10%, 20% out of the 10 times that they've tried to do it, only once or twice they're able to do it. And it looks like this is going to be. But Tesla investors, get ready because the rally is looking more and more likely. We got Q3 earnings coming. We've got the robotaxi event coming. We've got elections coming. If Trump wins, that's even better for Tesla. And we got main thing, interest rates going down. But I want to go and tell you guys the layout of what the Fed is going to do and why this is so bullish for Tesla. So smash that like button and let's get down with it, because this was pretty interesting on how they did it. Now again, this is their plan. Doesn't mean it's going to go according to plan, right? Things can always happen in between. But again, if it's gradual, if it's how they're going to execute it, I think we're going to be in a good place. This is what the Fed said in 2024, and I wrote this on X. If you guys aren't following on X, I don't know what you guys are doing, but if you guys are, then you guys are I'm pretty sure you guys seen this. The Fed highlights 2024. They just announced they're going to cut interest rates by 50 basis points right now, and another one by end of the year. So most likely another quarter points in October, another one probably in November or December, maybe even 0.75 quarter every single quarter, depending what the unemployment data shows, because inflation is done, guys. Inflation is finished. It's just the unemployment right now. Interest rates by the end of 2024 will be around 4.4% from their 5.4% now. So a whole 1% down, which is in 3 months time, which is crazy. In 2025, they're thinking another 1% cut, which interest rates will go down as low as 3.4%. In 2026, another 0.5% cut, which interest rates will be below 3% by 2026. Now, this is their plan. Things may not go according to plan, but the layout is there. They are cutting. They are cutting, and this is really bullish for Tesla, because here's the thing, guys. Approximately 85% of car purchases in the US are financed through debt. Not just the US, but all of North America and majority of places, not just in the US. But with today's Federal Reserve's 50 basis points rate cut, borrowing costs are going to drop, making a Tesla, which is already affordable. I don't know, with all the incentives that you get in the US, it's pretty darn affordable. I think I used Tesla, you can get one as low as like 15,000, 20,000, which is just insane. Imagine getting financed or leasing on that. It's the perfect time. It's insane. But making a Tesla, which is already affordable, even more affordable. Record Q3, Q4 could be in the works for Tesla. Now, I've already made a video what I think Q3 deliveries are going to be with the earnings. You guys can check the video over here. But for sure, Q4, I'm expecting it to be like 550,000 vehicle deliveries. It's insane. I am expecting. But these are the facts. These are the facts. When interest rates are high capital purchases requires you to borrow money, because if you want to get a home that's $1 million, you're not going to put $1 million in cash. No one has $1 million in cash. When you want to buy a brand new car that's 50,000, 40,000, 60,000, No one's going to pay 40, 50, 60,000 cash for it. They're going to get at least financed, right? If they're getting a home, it's a mortgage, and that requires borrowing, which is backed by interest rates. When interest rates are high, they can't borrow because it's expensive. That goes to cars as well. Now, when interest rates do go down, well, now things got a whole lot cheaper. The reason, and again, I mentioned this in the video before, the reason why Tesla had to bring down prices was because leasing and financing a vehicle was way too expensive, so they had to bring the price down so they can make the monthly payment cheaper. Now, the opposite is going to happen once interest rates go down, especially when demand comes back automatically and naturally. But nonetheless, the Fed remarks, this is their outcome, this is their goal, and this is what they're seeing. GDP will rise 2% this year. Growth will be the same in 2025 and 2026. Unemployment will hit 4.4% this year, and they expect this to fall to 4.3% in 2026. So pretty much stabilizing. But again, let's see what actually happens. They expect inflation to be 2.3% this year. Next year, 2.1%. Again, eliminated inflation, and target of 2% in 2026. Now, here's the thing. If they're expecting this type of a gradual decrease, then I think they have to bring down interest rates even more down, because if they're thinking it's going to be 2.1% in 2025 and then 2% in 2026, I don't know. That sounds a little weird to me. I don't think it's going to be this smooth when interest rates are higher than 2%. I don't know. We'll see. We'll see how it goes. But they are in the cutting phases. And I wrote this on my X, guys, saying now that the Fed makes it clear that they are now in the phase of lowering interest rates, more and more investors will start to cash into equities. Remember, guys, there is about $6+ trillion in cash sitting on the sidelines. And with interest rates going down, equities look a lot more attractive than having them sitting in a high interest savings account. Because when interest rates go down, the savings, the ratings that you will get, the interest that you would get that you would put your money in a bank is going to keep going lower and lower. It's already happened to my bank. And so people or investors, when they're getting 4% for free or 5% for free, whatever the rate is, now they're realizing that, wait a minute, now it's going down. Now it's time to go back into equities. Now it's time to go back into stocks, because now putting your money in an interest savings account or an interest account, you're not going to get as much anymore. And now because interest rates are lower, we can go in the equities market, because now businesses can borrow money, they can grow back in the expansion phase. So I do expect this. Now, there is like $6 trillion plus cash sitting in the sidelines that's ready to be dumped into equities, which is absolutely insane. But imagine how pumped the stock market's going to get. I end off saying here, stocks like Tesla, SoFi, and others that were hammered hard by interest rates will make the biggest comebacks. And I 100% agree. Now, here's the thing, guys. This sounds awesome. One of the biggest catalysts for Tesla in the short term is happening. Already is slowly happening. So we'll see some good things. But my fear is that we may be a little bit too late. The Fed should have started cutting rates a month or 2 months ago, maybe even earlier than that. That's why we had a 0.50 cut today, because they realized that, okay, we should start doing it sooner than later, because they're a little bit late. They are a little bit late. But my biggest fear is unemployment. Looking at the history of unemployment, once it starts to tick up or get worse, it doesn't matter what you do. It's gonna go up fast. Unemployment rates will go up really quickly if you can't stop it in the early stages. This is the history, right? If you look at the history, that's how it's always been like. And that's why we see a massive interest rate cut to bring down the unemployment numbers, hence a recession. I really hope that doesn't happen. I really hope it doesn't. And I don't know, this time when you look at the Fed and how they're talking, they're saying the economy is strong, unemployment is bad, but it's not as that bad. Job market is good. The economy is strong. They emphasize that a lot. Powell emphasized that a lot. But I don't know. Usually this unemployment stuff, once it starts to tick up, it ticks up fast. It goes quick. And they have to bring down interest rates really, really hard down, which would indicate a recession. And then things will go south. I don't see this happening this time around, but that is my biggest fear right now. If they don't do it, if this doesn't happen, then they have achieved a soft landing, like I mentioned earlier in this video. But that is one of my biggest fears. And let's just hope that won't be the case. But looking at the data right now, at the moment, it's looking pretty good. Tesla investors, get ready, man. It's about to be flipping awesome. We have so many good things coming. We have Q3 coming. that I think it's going to be a beat or at least a met for the first time, not a miss. Hopefully, deliveries are going to be better than expected, I think, in Q3. And you guys can see that video. It was a previous one to this one. Then we got the robotaxi event. Then we got the affordable vehicles coming. Then if Trump gets elected, that's even more bullish for Tesla. So I think we are entering a phase of bullishness for Tesla. It's been 4 years, guys. 4 years where the stock hasn't gone anywhere. And I think Q3 is a turning point for it. And I think it's going to be a wonderful beginning of a new rally. A small one, not a big one, because you know Tesla stock, it stays flat and then it spikes when something happens. That's how I view Tesla stock. But a rally to maybe to the high 200s, maybe 300s. My price target is 350 end of the year. Even though the chances of that is not high, I'm still sticking to it. 350. But that's my thoughts. That's what I think. And again, I am pretty confident. And I haven't been confident like this in a while because we finally got the interest rate cut. So that's good. But I want you guys to take a look at Q3. I think Q3 is going to be a turning point, and this is my final estimate in terms of the vehicle deliveries of what I think is going to happen for Q3. So check that out, guys. Let me know what you guys think about Q3 as well in the comments below, and all this interest rate stuff. I want to know your thoughts too. Subscribe, guys. Get your About the Dip t-shirt, and I shall see you guys in the next video. See ya.